Strategic Wealth Strategies podcast with our host, Alan Porter. Alan, what's going on, man? How are you?
Hey, it's a beautiful day in North Carolina here. I'm going to go out and play golf later on this afternoon.
Absolutely. And our topic today is both political parties agree America faces a retirement savings predicament. Alan, what
Yeah.
statement sounds like something everyone finally agrees on, correct?
Well, I think everybody is to include Democrats, Republicans, and Independents. But I was reading this in USA Today. Uh, Only about half of American households have a retirement saving account. The Social Security program may soon run short of money, and those benefits were never meant to cover the full cost of retirement. Republicans say they expect to need 2.1 million in savings to get through retirement on average, compared to 2 million for Democrats and 3 million for independents. One quarter of Democrats and Republicans who responded to the survey say they have no emergency savings, along with 29% of independents. I mean, this is unbelievable.
Alan, that statement sounds like something everyone we were talking about that. Alan, yeah, that's it. Alan, most people are invested in the 401k. Are there problems with that?
Well, again, as I said this many times, people in their 401k have no idea what the fees are. Some of them, like I said, 58% of the people don't even think there's a fee in their 401k. And I've said this numerous times on podcasts: a 1% fee over a 30-year period will reduce your income by 1/3. The average fee in 401k is 2.99%, which people will have half their money, and then they get hit with taxes anywhere from 20 to over 55%. And with rising taxes, if you do that 401k just for the tax deduction, now you got a tax compounder, which makes it a terrible financial move, because nobody can know what the tax rates are going to be when you retire. You don't know what your financial situation is going to be when you retire. You may be a multimillionaire. Who knows? But if you make that mistake, that one financial mistake, it can cost you hundreds of thousands, if not millions of dollars, just because you want to take that tax deduction.
Alan, what is the average balance for Americans in their 401k?
This is really amazing. Uh, the average balance for 401k for a 65-year-old is approximately $232,000. Now, Neil, that's even if they have one. And there's a lot of people who don't even have a 401k or an IRA or anything else. I just got an email from a lady, that's a client of mine, and her sister she's 78 years old. She's getting Social Security and guaranteed income from an annuity. Well, I tried to get her another annuity that pays her a higher distribution rate, because, Neil, it's about distribution of your assets in retirement. It's not about return on investment. But at least she had that guaranteed income. But I was giving her all she had was like $1,405 plus or so per year from that annuity, because it's not very little. It's only about $30,000, but it's $1,405 that was guaranteed for the rest of her life. And of course, she got her Social Security, and that's the only thing she had. So I had an annuity to replace it and give her almost twice as much of distribution. But the insurance companies turned it down because it does not meet suitability requirements. And I think there ought to be made an exception for things like this. Now, I understand the suitability requirements for people, especially younger. You can't buy an annuity if you don't have enough residual assets, to cover an emergency like replacing the roof or having to buy a different car or something like that. But when she's 78 years old, she has no other options. And it's very sad that I had to inform her that today.
Alan, any last words for this topic?
Well, people need to think outside the box of conventional financial planning. And they need to talk about fixed and fixed indexed annuities as an example. Let's say you have $1 million in a stock portfolio. Now, at a 4% distribution rate, Neil, that's $40,000 a year, but that's not guaranteed. In certain fixed indexed annuities, you'd only need approximately $650,000 of that stock portfolio to give you guaranteed income for the rest of your life, with increasing income, because we're not tied to the market. We have a guarantee by contract. We're never going to lose money due to a market downturn. And that's in fixed index annuities. I don't deal with variable annuities because they're tied to the market and their fees are over 4%. But just that alone, Neil, now you've got guaranteed increasing income for the rest of your life. And even if that accumulation value runs out, they'll still pay you that money for you and your spouse for the rest of your life. And that leaves you $350,000 to do with what you want. You can take that, pay the taxes on it, turn it to a Roth IRA, and now there's no taxation of Social Security or means testing for Medicare Part B, and there's no required minimum distribution. I mean, the list goes on and on. But again, cash value life insurance. I've said it many times. There's no other financial vehicle that has the benefits of tax deferred, tax free distribution, uh, tax free money for pennies on the dollar for long term care with tax free money. You become your own bank, borrowing from yourself and paying yourself back. You're protected from lawsuits, liens, and judgments. It's the greatest wealth transfer vehicle out there, Neil, because as an example, I've got multimillionaires that I've sold millions of dollars of insurance to. They don't need the insurance, but they need a financial vehicle that will pay the taxes on their assets so their beneficiaries can keep their assets. It's just like Prince the entertainer that died a few years ago. He had no exit plan. He had no will or trust set up. And when he passed away, the government has seized the assets in probate. I don't know if it's out of probate right now, but the beneficiaries are only going to receive 20, maybe 25% at the most of that asset that he had acquired during his lifetime. But what's really crazy is attorneys are going to get 6 to 12% in fees of that asset for legal fees. And people have to have a plan for everything, Neil. I mean, they have to have a plan for the retirement. They have to have a plan when they close their business. I asked business owners, I said, well, would you rather have a tax deduction or pay capital gains tax when you sell your business? And they said, well, I want tax deduction. How do I do that? And I just tell them, it's not how you do that. It's who I know that knows how to do that. Neil, I've got a team of tax-specific attorneys and CPAs and other specialists in the field, and we collaborate together, and we come up with solutions for people's financial problems. And I always had these, especially the affluent clients. Well, my CPA, my financial advisor, or my attorney, they give me all my tax and financial advice. And Neil, I just have 2 questions for them. I said, when is the last time any of them ever gave you any proactive advice on saving taxes? It's slim to never. And the other question I have for them, I said, you may have the greatest advisors in the world, but it's what they don't know that's going to end up costing you hundreds of thousands, if not millions of dollars in undue taxes, fees, and lost opportunity costs. And I show people, and because I have a lot of people tell me, well, what's lost opportunity cost, Alan? Well, we need to have a conversation. Again, I don't charge any fees for my consultations. Sometimes they go 2 to 3 hours. I want to educate people out there on what's available because majority of people out there have no idea what's going on. I've got doctors with PhD degrees in accounting and finance. They have no idea what I'm talking about.
All right. Go ahead and contact Alan today at Strategic Wealth, the number 0 @gmail.com, or call him at 910-551-1046, or please visit strategicwealthstrategies.com. Appreciate it, Alan.
You bet.
All right. That was Strategic Wealth Strategies podcast, guys.